How's everybody doing? Good. Trading room time. It's midweek update. Joe with you here on the 26th of October. We've got ourselves a pretty fun market. We've got ourselves a little bit of a bounce. So let's discuss what we can do with it as we get into the meat of earnings season. I'm going to give you my 2 cents. We're going to share trades. Of course we will. We always do. So just make sure you take responsibility for the outcome. There's a few last week I hope you guys caught. All right, so what do we got? Microsoft, Google come out, or Alphabet, whatever you want to call it. Both miss. Both project lower. Both are worried about the future. And they're both trading lower. However, the markets continue to move higher. The Dow has done nothing since the bell but just hit that gas pedal. And so it's pretty cool to see that this correction is moving forward. Corey referred to it yesterday as an ABC correction if you're an Elliott wave theorist in a downtrend, and it doesn't seem to be done yet. That's all. But sentiment is bearish. Now, I've kept that here, but I switched something over. What I'm seeing is, however, the markets know it. If everybody's bearish, everybody's pessimistic, everybody's worried, there's a lot of fear out there, everybody knows we can't sustain the growth we've had over the last few years, then the markets can just kind of do what they do. And it's not a lack of, it's not a increase of buying, it's a lack of selling. Traders have already sold. Everybody that's bearish really doesn't want to run in there, so prices will just move higher. So that's kind of that's usually the psychology behind a corrective action if this is indeed the C wave, which should be the last surge before another rollover in the overall bear trend, if you guys are into that stuff. So, we'll see. However, on the economic data side, we do have a slowing in housing. It continues on both new home sales, prices, construction, permits, all that stuff. It's definitely going in the correct direction when it comes to a cool down of the economy. It's bad when it comes to recession, right? Okay. Consumer confidence also edged lower. We'll take a look at the number here in a little bit, and that's to be expected as we see things start to slow down and some of the doom and gloom in the news. However, the markets are truly disconnected here. Keep that in the back of your mind as you're looking for new trades. In the short term, if they're going to be bearish, gotta be patient. Let this thing play itself out. So, what do I got for some trade ideas? Just perusing around. Not a lot. There's not a lot. BRK/B was a pretty interesting one, but it feels overextended. So if you guys can go ahead and take a look at that on your own. Crocs looked pretty good, but it's kind of in a symmetrical triangle. I liked COP just for the sector it's in. You'll see it, and United Health. We'll take a look at both those. General Mills still popping its head up. It was bullish last week, and I do like it bullish, but I do like it as neutral and Dollar General as well. Take a look at Toll Brothers, Verizon, and FE. Let's jump into them. Here is ConocoPhillips. Now, what I liked about ConocoPhillips is, once again, the sector, and this had that nice little breakout. By the way, folks, I hope somebody jumped on. Was it Chevron we looked at last week? I think it was Chevron because it broke off and just took off. It's basically parabolic. This is kind of doing the same thing. Had a nice confirmation, consolidated for a few days, and it's floating higher. I actually still like it above this 125 mark with a diagonal spread. Now, being as extended as it is here, I could see that maybe some of you might want to hesitate, play something a little bit more sideways here, or wait for it to correct. If this surge in the market continues, the C pattern, if you will, then this will be well over 130, 135, 140 before that happens. So it just depends on your timing on this and your expectations of this surge in the market. When this does correct, it could be pretty violent. You could see that the last time it did back in this area, it wasn't too bad. Just a little consolidation, and then it took off. It's just in a very strong sector. All right, so there's my argument for COP. Let's take a look at UNH. This one has a little bit more behind it. There's a couple things you could do with it. What I like about it is if you believe that this can consolidate and you want to be patient with it, then wait for it to get above that 550 mark. I haven't checked the earnings on these. You guys want to maybe take a look at those as well. Or if you believe that it might consolidate a little bit longer or even correct if and when these markets do, then we could play something sideways on it for a little bit with a break to the upside. So sideways to up, maybe a targeted butterfly. Boy, I can kind of move this into the sideways pattern if it's going to stay in this area. See, it does have this little gap in the last 3 days. It just kind of meandered around between 540 and 550. But this could be a little bit more of a range bound now that I take a look at it. Yeah, well, something to look at. It's kind of funny because a lot of these trades that I had were great. And it's this last 3 day of this surge that all of my bears, and I know you guys will look at it. I think I might have a chart or two we can take a look at, have just taken off, just 1, 2, 3 straight up. And they really haven't gone anywhere, but it erased any sort of low base consolidation pattern or descending triangle pattern. Those have all been wiped out over this these last few days with this market surge, which is really hard for me to buy into when it comes to anything bullish. Let's go over to the next one, if I can get the slide to move. So here is General Mills, and I like it as a bull. I still do. We talked about this last time with a huge a symmetrical triangle pattern, and it looks like it wants to break out. We also discussed, hey, we could probably range bound between here, and both of those plays are still in play. So if you diagonalize this, great. If you did something sideways, great. We're still fine. I like it. I put it on the sideways, but it still has that bull tendency to move towards that 81 area. So for you guys that diagonalized this last week, awesome. Stay in it. For you guys that want another chance, it's still available in my mind. I didn't check the earnings on it, so triple check that. Dollar General had a little bit of a blip of news, and it's got this surge. This is what I am seeing. It's this move over the last 3 days, and not just on DG here, which we talked about as a consolidation point or a range bound between, what do we say, 250, 240, I believe. But all of my bears are doing this. We also said, hey, this could be a descending triangle pattern. But I said, let's error to the upside. Well, at least I said that. Because it is kind of above its moving averages. And again, it did come from this trend back here. So a little bit of a blip. I don't know if this sustains. It's up to the resistance area. So anybody who played this sideways, it's pretty scary over the last few days. But taking a look at today's candle, it's still within that range. Just hold on and see what happens for the rest of this day. Keep in mind, this is a very interesting day. I've already had a slew of little texts and emails that the expectations were straight down. The futures were down, and the Nasdaq's not doing very good. We'll take a look at it. Two big companies come out, miss. They project lower. Not just them. A couple in the past as well came out and said, hey, we're not doing so well. Chipotle, right, folks? My $1,600 burrito that I love so much. Came out, the CEO said that we've priced out a lot of the market because we raised prices. And the expectations are for people to slow moving forward. And it was trading really high post-market. It gapped down a little bit, but it's hanging in there. So there's bad news out there and bad projections, but it's not impacting the overall market the way I expect it. Now, we've got a slew of stuff coming up this week and next, and I've got a list here, you guys, in a second. So keep that in the back of your heads. I mean, it's just going to be interesting to see if these markets attack anything specifically. Well, they are, or if it's going to carry into the markets, and so far it's not. So that's all I got on the side. Those are the sideways. Here's Toll Brothers Housing. What I liked about this is it's moving the wrong way, but I do like the bear rally in it. So this is one that is on my watch list. In fact, most of these are going to be kind of, hey, let's sit and wait and see if these things can turn. You see that it has. It's got this cool down trend. A little bit of a blip here as it moved higher, and it fell. So it loves to hit its 50 and roll over. There's just nothing good about it fundamentally, but it doesn't mean that there's a lot of bottom fishing out there that will sit in this and eat it for the next, I don't know how long. Housing, when it comes out of a boom, usually takes a while to recover. And this is, you can't really compare this one to 2008, as that was a little fraudulent with some bad loans. This is just a healthy expansion, and now we're getting the contraction. So we'll see where it goes. I like it. Be patient. Let's make sure that doji right there confirms. But it could be a fun bear. Let's go to Verizon. Unlike AT&T, Verizon's getting hurt. I like the gap down and the bear rally back to it. Let me get my marker and draw. This is a nice little filled gap pattern that's going on right now. And if it could stay at this area, yeah, even a little shooting star. Kind of funny, I just did a class on that. At this point would be great. And then confirmation moving downward would be pretty sweet. So wait for this bear rally to finish. Look at this thing just touch that falling 20-day moving average. Another good bear opportunity. It's funny. Today would be, well, today's not a very good day to get into it because it hasn't confirmed. But what's interesting is this thing isn't really participating in the market surge. So I wouldn't be surprised is if when the market rolls over, this will gap down. So if you want to do some sort of a vertical spread on this to get in a little earlier, I'm fine with that. The confirmation for you diagonal guys is probably already there. It just depends on how early you get into things. All right, here is First Energy, and I like this as well just because it had a big red candle today where everything else doesn't have a red candle. So I like the floor at 36. Be patient, see if it can continue lower, and jump into the bear side. Utilities, right? Wrong sector to be bearish, but hey, there's something wrong with it. That's fine. There's a lot of interesting moves in the markets. Individual moves, not such a big market sell-off. So we'll see if that continues. So let's do a market analysis since we're on its topic. I know we're moving pretty quick, folks, but we're just in the middle of a huge bull or bear rally, bullish surge. The Dow chart is pretty crazy. We'll take a look at it. So where are we at? We're up again. Now last week we were up. This week we're up again about pretty much the same percentages that we were a week ago last week. So this is overall for the last 2 weeks a very strong surge since Thursday of last week, right? So up Dow, SP, Qs, all up healthy, over 3% on the diamonds and the SPY, just shy of 3.5%, I should say, just shy of 3% on the Qs. Russell's super strong, another 5%, over 5%. Oil I thought was interesting, good move, 3.25%, and then gold still flat. That dollar seems to just be the main way on everything. So we'll see if that changes. I don't think it will. I don't see how the dollar dries up. We'll have to see. All right, so here's the SPY. Interesting enough, it looked like at the beginning of the day, and the day's not finished, with this open, and Corey nailed this. Yesterday he was talking about, hey, we should see an inside day here. I wouldn't be surprised to get a little bit of a hesitation or a pullback. We're at a moving average. We're still there. Pardon me, folks. We're still there. Right at the 390 level here would be a solid resistance, but to turn at the 50-day would also make sense. Isn't that interesting how this is yesterday's close, this is where we opened. So we were on tap to stay inside yesterday's candle. I'll draw that here, or maybe even slightly lower, which would have been classic. Day's not over, we could still get that. However, it's much different on the Dow. Let's take a look at that, because the Dow just is gangbusters. This thing is just in a bull surge that I haven't seen in quite some time. So here's that last Thursday we talked about, and we had our Wednesday class somewhere in this area, and you can tell we had that percentage. Here's the next Monday, Tuesday, Wednesday, and this is just right through its 50-day moving average, right through its resistance at 310, and it's got all intentions of getting up to that 325 or that 200-day moving average. If it gets there, great. If it doesn't, great. Doesn't matter. We just need to wait for this to find a resistance. And what I'm looking forward to is once the bullish surge quits, whether that's a lack of selling or if the bears just, once they come back into the market, it'll be interesting to see if the bulls want to try to absorb it or if they step out of the way. And if they step out of the way, folks, we're going to see this stuff again. This stuff, which is very quickly gapping, falling, big candles. It'll erase this move in 4 or 5 days. If we get that, well, then we know that the bear rally is still in play, and it's going to be super hard to try to catch some bears or catch that falling knife, right? But we'll see. We'll see. It'll be interesting to see if that VIX will spike, if this will fall apart, or if there's something a little slower moving ahead. All right, I use the Dow for that explanation because it is definitely this euphoric bounce and surge going on, more so than the other couple markets. Let's take a look at the next one. This is the Qs. It's got issues today because of two huge components of it, right? Google and Microsoft. It's got a whole bunch coming up as well. But it's got that same gap down. This is a huge gap down. But it's retraced quite a bit. In fact, it's retraced the majority of the loss it's had so far. So we'll see if it can't get all the way back up to yesterday's close. which look pretty strong. But it is well within that range. It's showing it's the weaker of the three, and it should be. And I think that's going to stay that way. I don't see too many more of these techs coming out and saying, oh, by the way, we're going to do really well moving forward. I imagine Apple, Amazon, they all follow suit. Meta, boy, Meta's got its own problems, so we'll see. But to roll over here would be nice and healthy. This is something I'm looking forward to. To go all the way back to Sunday's room, it's still one of the weaker ones. Tech is a great place to be when it comes to the bears. It'll probably trigger the first. It's probably got the most to go. It's probably got the better pattern, things of that nature. All right, so kind of just what I'm looking for. Not a lot of activity to do today. Let's take a look at the economic reports. And what I saw was here. So we got good drop in home prices. Home prices are falling quickly, and they kind of need to stay ahead of interest rates. If interest rates go up, home prices kind of have to come down to manage it. It's this balance that seems to not really help us as buyers. That's true. Here's the drop in the home price index as well. You can see they're both moving south. This is that little bit of a drop in the consumer confidence. It's difficult because we're still in the hundreds. So the consumer's leery. I don't want to say consumer confidence is falling apart. Once it gets 90, 80 into the 70s, then I know I've got a consumer that's really worried. Right now, they're just not as optimistic as they were. Here is the home sales. Now, it's an uptick from what was expected, but I'm not really focusing on it. What I'm focusing on is this. It's a drop from previous. So, yes, home prices are falling. Home sales are falling. They should be, and it's going the correct direction. That's nice. We'll see if the CPI can start to calm down. I think now we have a slew of stuff coming out for the rest of the week. I think that's going to have an impact. I really do. The GDP, the final sales purchase first estimate. Now they always revisit and they come back. I think that I guess it's this one up here that they measure. Sorry, folks, but I think that could have an impact if that's it. If that is higher than expected, woof. I think that has an impact. I know that's super late number. GDP is usually a whole quarter back, but it might be enough to shake or put the bears back in the market, I should say. The other one is the PCE price index. That's one we know that the Fed follows. We'll keep an eye on that. And then they have all sorts of different variations of the PCE number. So we'll see that might cause one of those Fridays that we've seen. Now, last Friday was the exact opposite of the previous four. Maybe that might shake it up if it's a bad number, or it shows that there's a little bit of heat out there inflation-wise. We could see another move to the downside. So I'm going to keep my eye out on some of these numbers over the next couple of days. Not so much trading, but really seeing how the markets react to some of these numbers, good, bad, or ugly. Okay, let's pull the class. Okay, let me close this. Share it with the class. And as you can see, we are pretty much flat to slightly up. Okay. Well, that's really interesting how we seem to mesh here, folks. So with the extension of the markets, the move, we're expecting a little bit more up or flat, maybe to stall out or continue a little higher from here. Awesome. I agree completely. All right. So what I've got here is I've got above the 20, above the 50, and my slope is also yellow. These things are all flipping around saying, geez, if you take a look at just my basic indicators, I should be a +1, maybe even a +2. However, if you take a look at that chart, you guys can see I flew through the 20. I'm barely above that 50. The slope of the 50 is still down. This is a huge surge off of a bottom. It is not trending, right? I have to be coming off of two higher lows and one higher high at least, or two higher highs and one higher low, which I don't know how you could get that. But right now, I'm setting the first higher high from a higher low. So I'm going to have to stay where I'm at, right? And where that is -2. I less bear it. I'm not -3 because I do think that we hesitate even with a sell-off at support levels that we just came from. And I'm also -1 because I think we consolidate unless this move is over. What I'm not looking forward to is a big drop. I don't want to see this thing just drop to 370 and then hit 350 in 3 days. That's just going to be awful. So I'm kind of hopeful that that doesn't happen. All right, guys, thanks. So we're kind of in the same. Seems like we're in the same boat, right? At least I believe we are. Cool. So let's get into the sector analysis. And what I've got on the sector analysis is everything's up, right? Communication services is the bearish one, and it's still not. It's up 1.39. I think a lot of that has to do with some of the earnings, and I think that gets worse. Well, AT&T did pretty decent. Verizon, I'm not sure. They're slipping. In fact, it was one of our bears, right? So let's take a look at the strongest and the weakest. You can see basic materials is ahead. Healthcare, which is cool. The UNH is actually a pretty decent trade now. Technology, I just think that's a bounce, and I don't know how technology is going to survive once we get through this thing of earnings. Understand, this is from Wednesday to all the way back to Wednesday, so it's absorbing that last really nice rally we had before we got into earnings. Once we digest Microsoft and Google, I imagine that's gonna fall pretty quick. So let's take a look at these charts. So first of all, materials, it's like the Dow. It's just gangbusters. It's just shooting up. We're above the 50-day moving average there, moving up towards, geez, the next resistance isn't until 76. Let me get my line here. You can see back that it had in end of June, and then the next one's going to be up here at about 78.5, 79. So it's still got a whole lot there, and if you take a look at the overall charts, these are all bearish. It's just in that corrective move along with everything. And it's pretty difficult to make anything more out of it than what it is. So here is communication services. It's doing the same thing that the NASDAQ is. It's just got that gap up, or I should say the gap down, and then it's trying to retrace that today. So it is below its 50-day moving average. It's well below its resistance level back in June. Understand that the communication services is one of the weakest components in the NASDAQ, which is one of the weakest sectors and indexes. So we'll see what that does. I imagine it just kind of peters around right here. Earnings is going to drive this pretty aggressively. All right, so not much to do, not much going on when it comes to making any sort of decisions 2 weeks out, 3 weeks out, 4 weeks out. I'm kind of up in the air. These moves shouldn't, the corrective patterns don't last long, especially the last surge. If this is indeed the C of the ABC correction, I put it in question mark there, then we just need to wait for this thing to fizzle out and see what happens when the bears do come back. And that's what I'm looking at. There's my 2 cents. So the bullish surge, it doesn't appear to be over just yet. It was really interesting to watch that surge after these big numbers come out. I'm like, oh, I think these futures are going to fall apart. The bell rings, and they just went boom, straight up. And they still are kind of going there. I mean, we'll take a look here in a second. So we need to see how the next bearish move plays out. That's really what I'm doing. Bearish and plenty to worry about, but the markets will do what they want. I left that exact bullet point from last week because I was saying, hey, you guys, we'll see. The sentiment is out there is bearish. There's plenty to worry about. We're seeing slowing, worried about the R word. It's happening in some points. We still have food that's still high, but the markets will do what they want. Well, this week, absolutely proving that as we continue to surge higher. Economic data, home prices, sales slowing, good. Consumer sentiment slipping. It's not falling apart. We're not throwing in the towel. It's just a little, well, I'm not as bullish as I used to be. Consumers going to be stubborn, slow to react. Big company earnings on tap. Now, this is what I could find. I ran out of space. Meta, Apple, Amazon, McDonald's, T-Mobile, SBAC, another huge communications company, Merck, Exxon Mobil, Chevron. I hope somebody got into Chevron last week. We nailed that perfect as a breakout. Honeywell and Boeing. Big, huge components of all sorts of different sectors and indexes. We'll see. We'll see if we can make it through or not. All right, enough. Let's go out and take a look at some trades and share with the class. All right, little slip. Looks like the NASDAQ hit its head on its break-even point or flat, but that's a heck of a move to the upside considering. Take a look at this heat map, guys. 5.77% down, 7% down on Google. Meta's down already. Amazon's down, and they don't even announce until for a couple or a day or two, maybe I don't know when they announce. But those are huge components, and for this to muster that rally back up is impressive. That is impressive. Apple's already slipping just a little bit. Dow right out of the gate, straight up. Looks like it's consolidating. We are moving in kind of to the lunch hour here. We'll see what happens in these markets into the close. It actually could be a pretty pivotal thing. And the reason being is because we just started the real meat of earnings. And how we settle this day could really give us, right again, a big bear candle, a reversal signal. So sitting and watching is going to be very interesting. Speaking of that, speaking of watching, it's time for me to watch your trades. WWE. And this has a little bit of something to it, saying earnings bullish all year, but no real pattern with a question mark on it. You're right. World Wrestling Entertainment. I used to love that. I should start watching it again. November 3rd is what it says. I'm not sure if it's there, but yeah, this has just gone parabolic. What's tough about these is when they go parabolic, it's difficult to, hey, where do I jump in? Where do I buy? So yeah, Robert, you got a kind of an idea here where you might just want to hold off, see what happens for the rest of the week. The cool thing is, if it is indeed November 3rd, you've got some time. Let me pull up my calendar here. You got a week and a half. That's next Thursday. So see if it can't consolidate or pull back, go into its options, see if it's got what its the expected move is over the expiration cycle of the earnings. Maybe just play it to the upside or downside, or you could do an earnings play on it. That's what I would do. But it is definitely bullish. I'll write it down on the bull watch, and I'm going to put a asterisk on it for earnings. It's tough, right? It's kind of hard to see what goes on with it. All right, we got another one here, Campbell's. Let's see what Campbell's Soup's doing. This has popped up a couple of times on our watch list to trade, and hopefully we've done pretty good with this. Oh yeah, okay, not bad. Got a little blip up today and a nice breakout. It could be a small cup and handle pattern for you guys that like that. I know Corey loves it. Corey's doing a class on it here coming up. Yeah, cup and handle pattern. Looks like it's kind of trying to confirm today. What do you got here? High base, November 4th, 50-52 spread for something wimpy, he says. 50-52 spread. Sure. See if you can't play something sideways to up there. I'm okay with tightening that up, 50, 50, 51, 52 if they have it. If not, or if you want to get a little, I don't know, it's kind of hard because when these markets correct or the first time when these bears step in, I don't know if it's going to survive. But a little bit of a credit spread there, 50-52 might work. Just see if it can't climb up to that 52 mark, 51, 52, something like that. I'll put it on the bull watch. Not a bad trade. It's holding in there pretty good. All right, Dan has XLI. Let's get to the industrials. Let's see what's going on over here. All right, past the 50-day moving average to the upside. Fall through today looking at a bull call spread. All right, let's see. Yeah, it did. It surged. And once these bears step in, it'll be really interesting to see where these go. But till then, Dan's looking at a 93, 92.5 November. Let's take a look at it. 93, just shy here, 92.5. Ooh, a little chicken trade, huh? We'll call for November. Very short term. 93, 92.5 for November. Ooh. Oh, okay. When you say very short term, Dan, are you going to take this thing off? Sounds like, because short term isn't November. November's 3.5 weeks away. 4.5 weeks away. 1, 2, 3. No, 3.5 weeks. Not asking for much, he says. Just a little bit of a squirt. Okay. I'll tell you this. This is interesting. This is tough because it might be a little bit expensive. Did you ever think about just a straight call? I mean, if you really just want to pull this thing off at 93, I mean, that's 50 cents. I mean, maybe just surge this up with a straight call. I know you're risking a lot. Maybe put a stop here. Do the November call. If that's all you have to choose from, you might want to just in and out. A call is going to be much easier to unwind. The vertical spreads are super stubborn. You know that, right? If this bad boy gets up to 93, that $93 call is going to be worth almost more than the 92.5 at that point. So you won't be able to sell that for much unless you really just want to carry this bad boy all the way through November and see if it can stay up there. I know it's not small. It's a small risk and probably a super small reward, but the time period is so long. Sometimes it's best just to take it, hit that 92.5 call, and just put a small stop on it and pull it once it gets up there. Yeah, my 2 cents. This is difficult to trade on a few levels. And the reason being is because it's at resistance. This could easily be read and turned back down. I don't know. Take a look at a few of those, Dan. I don't want you to try to make something out of something that's not there. That's all. Cool. All right, I'll put it down on the bull watch just in case, but we'll see. That's a tough one, man. Just feels a little risky. All right. Didn't think we were going to have too big of a class today, so we didn't. Not saying that you guys didn't show up. Just saying I didn't think we were going to be super active. All right, well, there it is. Let's see what goes on over the next couple of days. It's been a tough week. There's a couple of times that I try to pull a trigger. There's a lot of stuff that I've been squeezed out of personally. So that's kind of where these corrective ABC patterns, what they'll do. So unless you got something longer term, it's tough because when you go A, B, and by the time you make the C, your bears are so far away from being profitable. Even when the markets do come back down, they don't come back down enough. How many times have you guys heard that before? Right? Yeah, because that's kind of how they happen. So that's why you kind of need to get a target or play the long, slow play of something that is going to fall apart. It is a very difficult thing to do. Okay, let's do one more trade before I split. Oh, good. Good. Let's end it on a fun note here. Sebastian did get the CVX trade. Look at that bad boy. Man, I tell you, you guys, if I wasn't so bear-minded, right, I probably would have jumped in it with you. We talked about it right here. I believe that's Wednesday. Then we have Thursday, Friday, Monday, Tuesday, Wednesday. Look at that. Oh, man. Phew, taking off. Looks good. Oh, Sebastian, 175, 177.5. He's at max gain. It surpassed my target. Would you take quick profits or hold with expiration reporting earnings before market on Friday? It does have its earnings. Let's see. Are they pre or post? Hold on, let me check this real quick because this might be something fun. Let's see. Yeah, the line's coming with us before market open. You are in the middle of something. You know, hey, you know what, Sebastian? What you could do is, I imagine going into its earnings, it's going to be pretty strong. So why don't you take half? Take half as the bell rings on Thursday night, and then see what happens on Friday morning for the second half. I think it's cool. Okay, Saint, I plan on getting out, but possibly today is touching the upper Bollinger Band. Sure, it's tough with this, Sebastian, because it is working for you. It is moving higher. I would give it the day. I know you've got a small cushion on this, but let's say the markets fall apart and this doesn't, or let's say the markets continue higher and this continues up to 180-ish. Yeah, I mean, give yourself a little bit of a chance. Sometimes it's better to take a little bit more risk for the full reward than it is to cut early and run, especially when you kind of nailed this thing. That's my 2 cents on it. However, if you're too jittery, you're too worried, definitely get out of it before Thursday's close. And you'll be surprised on what one more day will do to your profits, especially with something this volatile. Just letting that decay one more day is going to really help your bottom line. It's so tough with these that you're in the money and you go to sell it and you're only getting 40% of what you should. It's frustrating. But then one more day you can get 60%. So just hold. Bite down on something, buddy, and trust in it. It'll be interesting to see what happens. Let me know what you do with it. I think that might be kind of fun. Okay, so once again, not a lot. Let me do this. I said I'd put an asterisk on World Wrestling Entertainment because it does have earnings coming up for if you guys want to play it. So not a lot to the bull side. Interesting, though, everything is to the bull side. I've got a slew of bears that I didn't even share with you because they all have 3 straight up days. So maybe by the end of this week or next week, we'll have a little bit more to talk about. Till then, folks, I really appreciate all of your interaction, and we'll talk to you next time. Bye, folks.